Last year, when interest rates were lower, people knew that inflation was coming, but the Fed told us that we should not worry since inflation was below 2%, which they believed. Since that time, however, we have seen a significant increase in commodity prices. So not only has asset prices gone up, but consumer costs as well. I don't just mean asset prices like houses, stocks, and so forth, but also consumer prices. The inflation index in the United States has skyrocketed at the highest rate in over 6 years as the economy continues to recover. In April, the price index hit an all-time high of 4.2%. It has climbed to 5% in May. This is the highest rate recorded since late 2008. All things considered, inflation is causing a lot of people to get hurt, while some people are making a fortune from it. So how disturbing are the rules you must abide by right now? The way to cash in on that is by weighing in on which opportunities emerge. Before we get to that, please make sure to give this video a thumbs up on YouTube. This segment is not about economics, and everything said here is for entertainment and educational purposes. Number 1. Hold real assets. However, if you wish to succeed with currency trading, live on the natural side the stock exchange holds. The demand for it has a significant effect on eventually setting the price tag. Let us consider what I have presumed. $10 of money on one side and 10 houses on the other. In this hypothetical situation, one place will cost $1. Still, if we apply another $10 into this field, we'll make an additional $20. Yet, though we will have 10 houses providing for real estate, a single house will cost you $2. Last year, when the economy happened to be on the verge of collapse, the Fed decided to throw trillions of dollars into recession avoidance by distributing stimulus checks and buying corporate bonds. As a result, 22% of the dollars presently on the market have been printed recently. Anybody with a basic knowledge of economics understands that inflation is growing. For that reason, whoever could afford the house at that time purchased real estate as opposed to storing cash because interest rates were at their lowest. It doesn't matter. The correct inflation rate is 2.4% or 3.4%. Since real estate was worth 15% more than previously, and various estimates suggest that for some, even by 20%, this means real estate investors as well as inflation. It didn't just be inflation, exceeding it even by the thousandth of a cent, but likewise caught over-leveraged deals and turned them into better deals because rising interest rates made mortgages attractive. Number 2, debt. Individuals that are averse to this kind of reasoning sometimes understand a good deal more than the average individual. Even in an inflated economy, I still have made a profit. The median house price today is approximately $350,000. Corporate bonds are a good way of investing funds, not only since the Federal Reserve diminished rates. In other words, when business loans were cut in cost, these investors began borrowing. The world's largest companies, including Amazon, Facebook, Microsoft, Apple, and numerous others, are major creditors due to their high creditworthiness. Due to its market capitalization of over $200 billion, Apple still owes more than it uses. Stock funds are a much better option than putting money in just any company that has a worthwhile market capitalization. Fortunately, you can rely on S&P 500 companies to give you at least a 10% return on your investment, and make ample use of this option. Even if you make a 5% interest rate on that borrowed money, by investing it into your operations, you're still making a 4% profit on top of that. When you borrow money, you get all of the tax benefits that this entails, so you will save even more on tax payments. If the interest rate is lower than inflation, any funds you borrow are considered to be a profit. Whereas the USD has experienced a loss of nearly 90% in value since the early 1900s. The value of gold has remained steady since the dawn of civilization. In 2010, gold investors panicked again and decided to buy gold again, and prices rose to a peak of nearly $1,900 per troy ounce. Since then, economic trends have stabilized and the gold bubble has popped. investors usually do not shop gold and instead spend money on stocks and other investments. Therefore, gold prices typically remain steady until the economic climate is predicted. Yet, when the supporters of a trade war began battling with China in 2019, gold prices immediately rose and continued to grow owing to the pandemic. Recently, the price of gold has surpassed $2,000 for the very first time. Gold is a solid way to make money against inflation. In 1973, $1 was a good deal of money, but today it's only a little bit of cash, even for a candy bar. Gold prices have risen from over $100 in 1973 to over $1,800 today. But I'm not fond of gold because it is a passive asset. It just sits there and shines. Stocks of real estate produce something like rental income. Gold has always preserved wealth during times of crisis, which makes this particular asset unique. Here's how it works. When the near future looks unpredictable, the price of gold rises. In 2007, the price of gold rose from around $600 to about $1,000 because of the financial crisis that struck in 2008. Investors dwindled and rushed to the gold rush. The dollar may lose value and become worthless, but gold remains intact. It's an active asset that transacts something or provides a service. However, why do stock values continue to climb? The reason is that the companies behind them keep growing and sales are growing. So does the price of Apple stock. Number 4, crypto. I believe this technology should prove a stable investment over the long term. Over the last decade and a half, crypto has created much more value than it did 10 years ago. I was skeptical about including it here because it is potentially dangerous to engage in long-term sales volume via crypto. However, since many people have benefited from inflation by investing in crypto, I've had to talk about it, but it's ridiculously risky. Over time, your subscription, the currency and technological development, I believe this technology should prove a stable investment over the long term. One of the primary reasons Bitcoin has seen such incredible growth in the last 12 months is because the Federal Reserve began printing trillions of dollars. But as we have mentioned before, Bitcoin was like digital cash prior to becoming invested in stocks, homes, and ministries. Let's try to purchase Bitcoin too. Many people in the past, more interested in cryptocurrency, weren't as interested in Bitcoin before the trade war. The initial Bitcoin price was about $8,000 before the global crisis, and the Bitcoin cost was only about $3,600 at that time. If you wish to get rich by investing in Bitcoin, others may not have cared if you had pursued it, but people usually get excited about something when it is making big news. But those who have bested their competition have learned a considerable quantity of tricks and have become rich by 10 to 20 times since it was first done. Number 5, stock. Compared with crypto, the stock market is more secure and significantly more volatile between July 2020 and July 2021, while the S&P 500 gained 40%. That's an extremely high return on the investment you're making in the economy since you're purchasing the whole US market. Whenever a stock is purchased, you are called a shareholder in the business. That's why there are also so many. Whenever there is too much cash flowing in the economy, the value of these businesses will rise. So you're earning together with inflation. On top of that, leftover cash is frequently spent on basic needs like clothing and food, which means businesses grow faster. Businesses also grow faster to make up for money that surges from inflation. Imagine how much quicker the growth of those businesses would be if they could sweeten their inventory with a little bit of stimulus money. You also realize that these corporate giants have taken billions of dollars and, in some cases, become the world's wealthiest people by taking billions of dollars in government loans. Now, the working world is reopening and consumers and investors are focused on investing their money. Individuals are spending more money and companies and firms are growing faster. Keep your money invested in financial strategies that are hedged. The wealthy, as a rule, don't keep a lot in cash. At times, they give a percentage of their net worth to guarantee themselves for unexpected expenses. Use the wealthiest people in the world as your inspiration to become successful. The more lucrative their livelihood becomes, the richer they become. If you're able to obtain free money and use it to purchase goods and services, you will be able to enjoy this rise in price on a long-term basis. Before we go, please hit the subscribe button, and also don't forget to click the notification bell so whenever we upload a new video, you will be notified. Please give this video a big thumbs up. If you have any consult or opinion about the video, leave the comment down below. Thanks for watching, and I will see you in the next video.